Welcome to TradeTheMBA.com. This is John's Reporters for the 6th of September. And well, it was funny because I was reading an email from a member who doesn't like to go on the Skype chat to say things, but sends me an email instead. He'll be laughing that I'm mentioning it. He was complaining in a sarcastic way about how I tend to mention these numbers of where things are likely to go, and we end up going there, and he just thinks it's ridiculous that I do it so often. But here we are, right up to the 76% here, which we had talked about once we got over the 61. That was obviously the next target. We were within our soft buy configuration that was getting stronger, and we ended up with the P3X2. So again, we're in that nice zone where the cyan started moving underneath, and this happened well in pre-market, so it was pretty clean and coming off of the strong move the other day. It's no surprise. We've had the crossover and everything was going just as expected. Everyone will attribute it to the news of, China-U.S. talks about to happen, but it doesn't mean anything. It's just that they're going to talk in October. I mean, you can make up whatever headline you want. The money was moving into the situation, and, that was the stability we'd seen here in the red DOC, and then continued to rise even here on the NQ, and that had been a little bit behind and caught right back up. So all good. Nice action, and of course everyone forgets that, fund money coming in around the 5th. We talk about it over and over. I stop mentioning it all the time, but this is what it looks like. And, you had this nice dip, and people got behind on the curve of it, and if they're not buying in, they're going to get left behind, and they can't afford to be behind what the returns are. So got to get into it. The euro coming back slightly. What a mess you've got in Britain. That's just a collapse situation. Italy, same situation there. So there's just a ton of nightmare, but the U.S. is going to still fight to try and keep this baby back above that 110, because it gets very precarious for them. So you can look for every time it bounces down for the Fed to want to get back into it. However, we dip below the red line, so we're coming right back to it. It's just a question of waiting for the first dip of that DOC red, and that's when it's going to make the move back down. Oil, I added the Morganacci lines in there. It was one of the few charts that didn't have it on there. I just thought I'd put them in there so you can get an idea of what we're talking about here with the 50% line that's been back and forth with this going all along. And again, this just represents, again, if you have oil maintaining itself and holding, that bodes well for economic views for the people that know, not for the pundits. If you want to go to a punditry class, you look at your euro, you look at your oil, gold, and that tells you where real things are happening, because people with real money actually make things happen, not the ones who talk about this, that, and the other. So you can see gold putting in a little bit of a retrace on a strong DOC spread, meaning that the potential for softening, this is going to be the big question. Some people are talking about a 50 basis point move for the Fed lower. Most don't think they'll do that. It's hard to imagine, particularly. It's going to be an interesting question because Trump's put a lot of pressure on them by calling them out, saying that if you don't lower rates, you're actively working against my re-election, and that has a lot of political connotations. We'll see how much effective approach that is in calling them out, or whether they feel like they have to prove their independence by bucking the trend. But he's been tough on Powell, so is there anything wrong with that strategy? No, I think it's probably effective. We've already talked about how ridiculous the rate hikes were at the start of his presidency. I was, mentioning that from day one, and proved to be correct, because things would have gone so much better had they not, but whatever. So going from, the other day, Wednesday, we had the increase rising into it. Then as soon as aftermarket came in, we were still well with cyan under red, leaving it a little shrunk down here simply because this led to a massive move. Nice DOC spread. The DOC spread, though, happening without a move above steel, above cyan, and then below. But when it's below negative 13.5, you're expecting a soft. And this is one of the things I'm putting into the program to be what I would call a soft DOC spread versus a stronger one. This would be under the category of soft. You have all the other elements, just not that steel. It does have powerful impact. But the fact that it's coming from the negative 13.5, as we've talked about the cylindrical nature of this indicator, that it's really also coming from above. So as long as it's below that, you have pretty decent power. But as soon as you get that orange dip in the crossover, that's bullish, and that's the time to turn it around. You could wait for the cyan under red. There it is, boom, and that was another beautiful takeoff. Again, another DOC spread for a short right there. This time you did have the steel come above and below, so I expected that one to have a little bit more power, and of course it did. And what did I put in here? Oh, that's right, the 77, and well, let's enlarge this first, and then I'll slide it over so that we can get a close-up view of it, and we can get a clearer idea of what it looks like. Hey, don't want to move that. That's my DOC spread. There we go. Slide that back across here. All right, so it kind of like petered sideways for quite a while once that came in, but as long as it wasn't breaking above the ABM yellow right there was nothing else to really do with it but just sit and wait. I had the targets of the 77, but my bigger feeling was that we were going to reach that 71, which is positive extremes going back from here. Could we mark all of those positive extremes? We could, but it was just more significant sticking with the relevant ones that had a series of bars coming across them, like this did right here, and that's exactly what we filled back in. So that was a nice targeted short from that particular spot. That being said, it's a short within what the 50K had bought for a long. Now this is the Momo buying here. This is one of those where we talk about always buying red always buying cyan under red from a DOC, but more particularly when we're above or at near the 76% or above the 61 is what I believe is in the programming. You want to have the steel below cyan. That produces the best results, and so even from that entry, which the Momo had it at 29.27, we're at 29.70, so it makes a big difference going forward. So that's already a nice 50-point move from just having that extra. And got a couple of the other ones that are about to get added back into it. More likely than not, too, this one will show up in there, which was the blue candle from additional pivot, so that's going to be added. That'll be added to both, just so that it's in there for both of them. But it did not do this for the regular program because it doesn't have that feature built into it. So if it didn't have the proper resets, it wasn't going to do the same buy. So that's the difference between the T. So you can see it right there with the Momo trade. Just thought I'd throw that one in there for you to look at. And that's where we're currently at. So we're in a reset mode right here. We've got some dips below the red line, meaning probably see a little bit more weakness. That's okay. This is quite a move. After a couple of days, you would expect to see a pretty significant retrace into this kind of setup, but maybe another day or so more. The funds still have more cash to put into it. We also saw companies like Apple and some of them, garnering billions for bond sales that a lot of them plan to use for buybacks and stuff. So companies are certainly going to have the liquidity, and they're the floor that has really underpinned most of what's gone on with the market, despite people's concerns about the end and the sky falling. These companies have a lot of money and really buy up their stock because they want to limit the supply. It improves their EPS, and that's just the way it works. So you don't want to fight the money. That's why we got to go with the indicators as they are, because it's the algorithms that are buying, not support and resistance line trend lines. I've never seen a trend line buy any stock. I only see people actually do it, and only the people with money are the ones that matter. So Joe Schmo can have his opinion. That's great. I love him, but no, he doesn't move the market. So let's stick with the guys that do, and we're just following in their footsteps. So as always, if there's something new and special, I'll put it up on the Skype chat, but this was pretty straightforward stuff, clean and easy. As always, though, we'll talk again later, and have a good one. Friday coming up, so should be fun. Trade well.